In this video, I'm talking about how investing more in your 401k may help you beat inflation. Today's vlog is being brought to you by 401k Maneuver. 401k Maneuver provides online professional account management with the goal of supercharging your 401k account performance. So stop leaving money on the table each and every year in the form of lost returns. Let us help you. If you're new here, be sure to hit the subscribe button, and the links to everything that we mentioned in this video you can find in the description box below. Let's jump right in. To achieve retirement savings goals, it's crucial to not only protect your savings, but also ensure they grow at a rate that outpaces inflation. With inflation eroding our purchasing power and hard-earned money, many investors are wondering what this means for their 401k. The good news is, it's a powerful tool that may help you beat inflation. Inflation is up again. September PPI data came in higher than expected, as did CPI data earlier this month. The Producer Price Index, which measures cost for finished goods that producers pay, increased 0.5% for the month, the Labor Department reported on Wednesday. The CPI, or Consumer Price Index data for September, also saw inflation jump from 2.97% in August to 3.67% in September. And some might argue that the 3.67 is way off compared to what we're feeling whenever we buy something or get into our cars to go to work. So let's talk about how 401ks may help beat inflation. Traditional savings accounts and low-yield investments often fail to keep pace with inflation, resulting in a loss of purchasing power. On the other hand, stocks have proven to be the best inflation hedge longer term. The market has averaged about 9.4% a year since 1928, which greatly exceeds inflation measurements by 4 to 5%. In fact, when you look at the 17 highest inflation years, the market was up 12 of those years and up double digits in 8 of those 17 years. In the 5 highest inflation years, the market was up 4 of those years. One reason is that some percentage of inflation itself is corporations passing along higher costs, which stabilizes their earnings. Ultimately, this has led to some of the strongest bull markets on record. And this is where investing in your 401k becomes advantageous, especially if you're rebalancing your portfolio to manage risk and maintain growth. Failing to regularly rebalance your 401k portfolio often results in significant losses during bad markets and opens you up to more risk exposure than you had initially intended. So, adjusting your investments based on market conditions and your tolerance to risk may increase your chances of beating inflation. Taking into consideration the data above and the fact that inflation erodes the value of your savings and your purchasing power, it's critical to continue your 401k contributions. Consistently contributing in times like we're in right now may help you stay ahead of inflation and maintain the growth trajectory needed to achieve your retirement goals. Now let's talk about other reasons to keep contributing to your 401k right now. Aside from beating inflation, here are a few other reasons why you want to continue to contribute to your 401k. Let's talk about the tax advantages. One key benefit of a 401k is the ability to contribute pre-tax income, reducing your taxable income for the year. This means you can invest a greater portion of your earnings, maximizing the growth potential of your account. Let's talk about compounding growth. When you invest your earnings, your investments generate returns on both the principal amount and the accumulated gains. Keep contributing, and over time, compounding can significantly boost your savings and help you outpace inflation. Let's move on and talk about diversification options. Your 401k allows you a range of investment options to diversify your portfolio. Spreading your investments across different asset classes may help reduce the risk of being heavily impacted by inflation in a single investment. In addition, if you select investment options that historically provide returns higher than the inflation rate, you may have a greater chance of beating inflation. Just remember, there's no guarantees. What about the employer match? Keep in mind that employer matching contributions may significantly enhance your ability to beat inflation. If your employer offers the match, take advantage of it to amplify your retirement savings. Now let's talk about avoiding fear-based decisions. As hard as inflation can be in your wallet, halting 401k contributions may not be the best decision, especially if you want to beat inflation. If you're fighting the urge to move to cash or to stop contributing altogether, consider this. Stocks have always been the best inflation hedge longer term, and This means your 401k may be the best hedge against inflation that you're seeking right now. Down markets provide an opportunity to accumulate more for your retirement future. So instead of panicking and wanting to move to cash, can you instead view this as a chance for you to increase your portfolio holdings? Making fear-based decisions today may hurt your future. And remember, whenever you cut back on your 401k contributions, you push back your retirement date. If you pull back or halt 401k contributions, you may miss out on the employer match. And this means you're throwing away free money. Have questions or concerns about your 401k performance? Click below to book a complimentary 15-minute call with one of our advisors today.